and today I will be presenting a slideshow presentation on stakeholders. For this particular topic, I have chosen to do the government and regulators. So to begin with, I'll go through the definition of a stakeholder. A stakeholder is any individuals, group or organisations that are interested and or affected by the activities, decisions, outcomes and success of a business or company. Stakeholders can be both internal and external. An internal stakeholder includes employees whose job satisfaction and career growth are tied to the organisation's success, or it can be management. The management usually makes strategic decisions and they oversee the performance of the company. And lastly, shareholders who have financial interest in the company's profitability and long-term viability. Whereas external stakeholders encompass customers whose satisfaction drives demand for products or services, suppliers who provide the essential goods and service to the company, investors and creditors who supply finance and capital to help the company's growth, and lastly, regulatory bodies and government agencies who enforce laws and regulation, and they change the way businesses operate. It's also pretty worthy to note that the local community is also considered a stakeholder, as public perceptions, trends and influences may impact the organisation's reputation. So what is the relationship between the government and businesses? The relationship between the government and businesses is considered extremely important and essential. The government sets and enforces laws and regulations that businesses must follow in order to ensure that they are operating following and to make sure that they operate following acts and laws such as fair competition, consumer protection, and environmental sustainability. In return, businesses are required to comply with these regulations, which can include labour laws, for example, minimum wages, safety standards such as work health and safety, and environmental rules. The government also collects taxes from businesses, which are used to fund public services and infrastructure that may benefit society and the business environment. Additionally, the government provides support through incentives like tax breaks and grants to encourage the business growth and innovation. This relationship is characterized by mutual influences, where government policies may impact businesses' operations and businesses can advocate for regulations that may change the way companies operate and function. Accounting information the government needs from businesses. One of the main pieces of accounting information would be financial statements. Financial statements are important documents that provide a detailed explanation of a business's financial health and performance over a specific period. This is usually done annually, every financial year. Governments rely on these statements for several reasons, such as regulatory oversight and ensuring transparency and accountability in the financial market. The main types of financial statements include the balance sheet, income statement, and cash flow statement. For an example of this, I chose a cash flow statement, and a cash flow statement helps the government determine a company's liquidity and if it's able to make enough money to meet its debt obligations. This information is essential and interconnected with the government, as is used for assessing the financial resilience of businesses and the company's potential impact on the broader economy. It may also be used to detect any irregularities or unusual cash outflows, which can thus even detect fraud cases. Thanks for listening.